Good evening, all. Ira Epstein, and what a day today was for Wednesday, and we are now at the 21st of September, 2022. So, remember that analysis that what history had shown with the last rate hikes, and out of how many the market has rallied off of them? This was one of them that didn't. It tried. You got to give the market all the effort. It tried over and over. As the announcement came out, I would walk away from my computer, you'd be up 200, I'd come back in the Dow, you were down 200, over and over. Late in the day, I saw the capitulation as it started to happen. It began probably just around, I want to say 2 o'clock. Fed Chair Powell was still talking, but I'm watching the market shift its gear, and that did it. I said, uh-oh, this is going to be bad going into the close. And he ended early, you know that. He normally talks to 225, 230. He quit at 215. He didn't want to say the wrong thing. And basically what he said is the dot plot says that the members think they're going to go up another 100 to 125 basis points this year, 2022. It'll go up at least a quarter in 2023, if not more. It depends if inflation stays sticky. Sticky is a large part of the problem. It starts with labor. He mentioned the JOLTS data, how many jobs are being offered for each person that's capable of working and isn't. He said it's too high, that employment is stronger than they thought it would stay. And what he didn't say is that helps the economy stay strong. What he did say is they have to break the back of demand. And it's happening in housing. It'll happen in other areas. And he said the Fed will be relentless in it. Now, if you don't believe him, that's up to you. I believe him. And I think they will be able to beat it for a couple of reasons. Number one, I think that I'm not sure that it's just going to stop at 4.25%, 4.5%. It could have to go to 5%. Why? It depends how inflation sticks. If it doesn't stick a lot, no, they won't have to. But if it does, they need to see inflation turn down and head down. In other words, you hear me use that word embed. Locked in is what it means. They've got to see that that's what it's doing, at least in the headline number. And then they'll turn their attention very quickly, because that's their favorite, is the core number. And what he really telegraphed to you today is interest rates have to go over what the core inflation number is. It's got to get ahead of it. Whether it's a quarter point, whether it's a half point, whether it's more than that, I couldn't begin to tell you. But that's what they're doing. You got to cut through all the nonsense and get to the simple part of it. In order to beat inflation, you got to beat wages, rent, all the things that stick. The volatility of a gasoline price, you don't worry about. Does that make sense? But everything else you have to pay close attention to, and he's out to hurt that. Now, I do think that as strong as he's talking about jobs data, he also interjected a few other things. That while the JOLTS is there, they're questioning if the surge in wages is going to continue. In other words, a lot of people are being let go at companies. Those people will not land without a job. When you hear 150 today let go by, was it Nike? One of them let people go. They'll find jobs at another retailer or another industry. Why? Because there's so many job openings for their type of skill level. And because you need those people, they won't take cuts probably in pay. They'll either make the same or maybe a little bit more, but a little bit. You don't have to chase people with the money. That's the difference that's happening. The economy is slowing. As it slows down, be it the Salesforce people, all these other companies, look at your Home Depot chart. Do you need all those people? That becomes the question. Speaking of Home Depot, well, it hasn't gone anywhere. Yes, it was down a point today, 0.95%, but it's been stuck in this area. The trend is still down until you take out 281.23. The resistance is 287.41, but that's, $14, $16 away. That's quite a bit away from here. And the likely support is going to be closer to 267 if the market has legs to the downside tomorrow. It's a big if. We have to go through an event. The U.S. comes out, or the Fed comes out at 1 o'clock. What time is it in Asia? 13 hours later, whatever it is. People sleep. You do know that, all right? Then they wake up in the morning. They look at these numbers. At first, they get a reaction one way, and then it starts weaving back and forth. Then it moves to Europe. Now the Europeans, obviously when we come out, it's 7, 8 o'clock at night in many parts of Europe. They're out of their office. They're with their families having dinner. They'll trade it in the morning. That's the yin-yang. We do one thing, then the whole thing comes around and back to us. That's why sometimes you go to bed and you wake up and you were down 500 points, you're up 300. It's just the way that it works. Understand, people get to digest all that. When I look at momentum, oversold. So I'm not thinking Home Depot's going to crash here. I'm not buying into that story. I think it'll do what it did here. It'll hit the Bollinger Band and find a level it'll play with. But overall, it's still in the bear camp. Netflix backing away as it should from the upper Bollinger Band. I can make an argument it wants to go back to the 18-day average of closes, but the trend is up until you take out 227.83. On Apple, Apple's probably too richly valued. I was watching the end of the day recap on CNBC, not Kramer, the end of the day, as the boys are all talking. They have 5 people. It was bright what was said there. They said, yes, they think that if you take a look at the PE and you look at these companies, it's the top tier companies that still have the high PEs, be it the Apple, the Microsofts, and so on. And they said those have to come down more for the market to find real bottom in it. Might be something said there. In any case, I looked for resistance at the 18-day average. I have it. I see a trendless market at this point there. In Disney, you know I've not been friendly this market for all the reasons I've given you. Price of tickets, blah, blah, attack on their streaming service, which, by the way, I don't have it, but I keep looking at all the new shows they're bringing on. You got to applaud them. They're going to try to keep an audience and expand it, but the market's not buying into the story. It's out of the Bollinger Band, not a place to be short. First challenge of the 100-day average, got under it. Wouldn't be surprised if you try to grab some traction there, but there's no reason to be a buyer that I can see. XLF today, the financial services. Again, you had a bear trend coming in. It hit today the Bollinger Band. It's not embedded. The way I teach to work in my enhanced Bollinger Band course, this is an area, again, to cover all your shorts. It did the same thing back there. You bounced. I'm not telling you to be a buyer. I am saying I don't like the short side anymore once you hit that. XLI, you had your bounce right back to the Bollinger Band. If you embed, you're probably going lower in this. And what are they going to do? The market is saying, with all those interest rate hikes, industry's going to be hurt. Manufacturing, the industrial sector, they're after that. Keep your eye on it. Semiconductors, they're not after that so much. It got up today, went to the 18-day average. Now, if you take a look at this, I teach this all the time to you. If the market turns itself up from here, you got pretty strong resistance at the 18 and the 100-day average of closes. So the market visited that early on, gave it up. You knew that was the resistance zone. Not hard to see. It's not a buy up there. XHB, the home builders. Well, what do you do with mortgages? They're just going to keep creeping higher. However, the public and the mortgage brokers are smart cookies. This game has been played before. I played the game for years when I was buying real estate. And you go to variable rate mortgages, you wait for them to peak out, come down, you do your refis all the time, and you're in the game. Do I think home prices are going to fall sharply? I do not. I'm not in that camp. And the reason I'm not in that camp is supply. Yes, there's more supply when you can't sell, but the homeowners that are out there that have owned these homes, they're in pretty good shape, and a lot of them have fixed rate mortgages. They don't have to sell. So you'll get some that are variable rate. They'll get reset. They're going to want to move on. But you're not building enough new homes yet. Now, we saw the starts and the permits the other day, and you saw a 10% jump or 12% jump in the starts. They're going to finish those homes, but those won't be ready, as I said, until late spring, summertime. XLE, lower highs, lower lows, coming into the support here. Between here and the 200-day average, that's the support level. You've got a lot of 200-day, first time you hit it, I would not want to be bearish, nor do I like being bearish on the first hit of a Bollinger Band again. In the gold, it is trying to be better. Now, better is a big word. There's nothing bullish on the chart, but there's reasons with today's action not to be bearish anymore. In GDX, same thing. You're fighting a battle at the 18-day average. Now, over and over the past week and a half. If the market can clear the 18 on a close, you might make it up to wherever that top Bollinger Band is. Copper is still bearish. The bears, I think, will sell this market at 30.21 with super tight stops into that 30.49 level and call it a day. And they might even reverse to the long side if it got up there, without first taking out today's lows. So I think they'd sell it, have a stop and reverse. TLT, the one thing I told every one of my subscribers today is you don't want to be short anymore. Out of the market before today's news. You lost the embedded reading here. You take a look at BND, EFA, you'll understand what I was saying. And in the dollar index, you're over the upper Bollinger Band. You just hit it for the first time. So long. I realize all of you are going to get super bullish on it, and I'm telling my traders, start peeling off your position. You only stay over that upper band 5% of the time. Be careful. FXE, the flip-flop of it. Time to be coming out of the shorts there. Just the opposite of what the average guy on the street thinks or does. And I'll cover that with you in detail in the morning. So let me tell you how this works. In the morning at 5:30, I start recording the futures. I do 40 some odd charts covering the whole spectrum. The stock indices, the interest rates, the currencies, the metal markets, livestock, grains, soft markets, metals. Did I say metals? Metals will be in there. Into the energies. 40 charts. They're live as I'm doing this, telling you what I see. And sometimes I switch back and forth between daily and weekly charts, bring them both up to make a point for you because I'm researching it before I ever record. At 9 o'clock, I start recording approximately the ETF. I wait till 9 because I want the morning data to come out. At 5:30 in the morning, most U.S. economic data doesn't start coming out until typically 7:30. Some reports come out at major reports at 6. It's rare. So I'm ahead of those, but now I can talk to you what those reports said. I let the algorithm traders step in. Now I'm making the recording, telling you exactly what I want you to do. I keep record of everything that I'm keeping up with, so I can talk to you sensibly the next day. This is what I said. This is what blah, blah. I manage no one's money. I don't want to manage money. I don't want you calling me and telling me how you did or didn't do. I'll answer all the questions as a subscriber you have. And I do that. You can write me, you can call me on the market. But I'm not interested in managing money. I get that thrown at me a lot. Not one person do I want to do that for. I want to enjoy myself, and that's what I'm doing. So if this is of interest to you, you go to our website. It's inexpensive. You're going to get 48 videos every 30 days, including on the weekends, just weekly charts, where that's for the person that wants to hold longer. That's where you're at. Longer is a definition word. It could be a month. It can be 6 months. I don't know. The dailies, I'm not a day trader. I'm a swing trader. You can be in that for a week. You can be in it. If I'm wrong, you're going to be out of it right away. And if I'm right, it can go. So you wait and you see what it is. You have nothing to lose. Super expensive. You can quit when you want just by hitting a button. I unsubscribe. You're done. IraEpstein.com under research, or follow my finger right over my head. Put your cursor. You'll see an icon. Give it a click and away you go. I'm Ira Epstein. For those of you lucky enough to be a subscriber, I will see you first thing in the morning. And for the rest of you, subscriber ready. Take care.